Video 3, Ultimate Traders, Reddit, Nathan from Queens, trading plans October 3rd, 2022. So this past week, incredible. It didn't work out the best it could have. I mean, I started off the week with about 11 puts. I have about 15 puts now, either 14 or 15 puts. I covered about five to six trades this week on the puts I covered. But throughout the week, even though I covered on 5 puts, I was up on another 3 or 4 puts, but I didn't take the profit because I knew the market was going to go lower. So we're still going lower. I would prefer at this moment not to have more than 15 puts. But if on Monday, if things go according to plan, I'm going to cover 2 puts. Tuesday, 2 puts. Wednesday, 2 puts. Thursday, 2 puts. Friday, 2 puts. So that's the reason why I try to spread my love. Because a lot of people are telling me, or they're upset. They're like, who is this guy? This guy is a joke. I have $2,000, $3,000, even $4,000, but in multiple puts. You know, I don't YOLO. And I don't want to YOLO. I'm trying to be as careful as possible and make decent money with the option that I'm buying, the contract that I'm buying. Okay, some people they're YOLOing, they're buying puts with way out the money that are due in 1 week or like 2 to 3 days. Now, if those hit, you're gonna make a ton of money. But I don't want to make a ton of money. I don't want to make a ton of money. I'm buying puts that expire December, January. I'm making less money on them, but I'm still making my 25%. That's what I'm trying to make. If I put $2,000 out, or the other day I put $3,000 out, I made $800 and $3,000. That's good enough for me. This week I covered on 5 or 6 puts. I made like $3,000 to $4,000. $3,000 to $4,000 on those, and the initial investment, 5 or 6 puts. If I'm putting $2,000 in each one, initial investment $10,000, made $4,000. You got a problem with that? That's fine, not me. I'm good. I'm good. And this week, like I said, if things go according to plan this week, cover 2, Monday 2, 2, 2, 2. And that's why I try to spread it out. Because no matter what, there's no way that you know for sure what is going to go up, what is going to go down. So by buying all different puts, you spread your risk. And you don't know what's going to hit and what's going to hit when. Even if the market, the trend is down. But we can have 3 days down, 2 days up. Like this past week. This past week we had a roaring. The market roared. Apple had bad news and the market roared. That was pretty dumb. But stuff like that is going to happen even in a bear market. So when stuff like that happens, you got to wait. Yesterday morning, Friday, September 30th in the morning, the Nasdaq was up maybe up to 150. I was bidding on a ton of puts. I was bidding on SNOW, SNOW. GTLB I was bidding. I bid on Cyber all week, CYBR. I bid it on APPF 3 days, but there was no volume on APPF. I was almost going to just hit a market order and buy APPF. It's a software company. Now, I have an elite team. There's about 25 of us right now. Obviously, if you check CarMax, KMX got crushed. Nike got crushed. Those 2 companies are profitable companies. CarMax has a P ratio of 10, 11. Nike has a P ratio of 20 now, 23, 24. I'm not saying those companies can't go down, but I'm bidding on puts of companies that don't make any money. I'm doing GameStop puts, Roblox puts, Affirm puts. Those companies won't make money for years. I'm risk averse. You guys can make money buying those companies, puts on those companies. Like one of my guys was asking me Thursday on Levi's, What would I do with Levi's? I'm staying away from Levi's. I'm not saying Levi's can't go down. Levi's, I think right now is about $14, but the P ratio is 12. It could definitely go down. If you put a gun to my head, I'll be buying puts on Levi's, because judging by Nike, judging by Apple, judging by Ford, those are the signs. Those are the signs that if I had to choose, I would get puts on Levi's. But I would stay away from Levi's, because if I can get puts on Snow was like 183 yesterday. They're not going to make money for like 2 or 3 years. I'm buying puts, dealing on stuff like that. Why would I buy puts on CarMax with a P ratio of 7? It can go down, but the reason why you don't want to buy puts on real companies, if a real company makes money, they get upset. They're going to do like STNG Thursday. On Thursday. They bought 225,000 shares in the open market. So when the NASDAQ was down, what was it down? Like 350? The NASDAQ was crushed. STNG, which is a tanker, they do oil, was up big on Thursday. Why? Because they were mad the stock dropped to $35 the other day. So what did they do? They used the cash they made. They went to the auction, the stock market, and hit buy. That stuff can happen when you mess with a company with a low P ratio if they have cash. And you can't prevent that. Okay, and you can have a gang of apes trying to gang up together and short that, but they're not doing 225,000 shares market order. All right, the company spent $10 million, but I think it's a multi-billion-dollar company. Let me check. I think it's a multi-billion-dollar company with a whole bunch of cash. So who do you think is more powerful? The apes together? The apes together? Or a company with cash coming to the market. And that's what I'm saying might happen to Zim. By the way, Sting is STNG is 42.50. It went down to 35 and they came with cash. So it's a $2.5 billion company that makes money. So they bought up their stock because there's not that much action on their stock. So they only use $10 million and they have tons of money, and the stock went up $3 with $10 million. So that's why you can't. I'm not saying you can't. You do what you want to do, but I don't like shorting or buying puts on companies that make money. Like Zim, I think Zim is like 12 or 13% short. What of the float that's floating out there? What are you, crazy? What are you crazy? If Zim wanted, I did a video last week. They could do no business for the whole year. Pay up all current liabilities, which is close to $2 billion. They have $5 billion in cash. They can pay up all the debt for the next 12 months. Everyone can stay at home, and they still have $3 billion left over. The whole company is worth like $2.8 billion. The float, they have 120 million shares. Off the top of my head, I didn't check the float because I don't even care about the float. But the float is what's trading out there. I don't think there's that much in the float. Okay, I don't think they want to go private, but they should go private, because when you go private, it's because the stock price is low, and you want to buy out the company because their P ratio is less than 1. So you want to buy out the company. But if you're not public, you can't sell shares if you need it. Insiders can't sell shares if they need it. If you want to borrow money with convertible bond, where you tell the people that loan you the money, you don't want to pay them back, but they get shares, you can't do that without a stock. So you need to have a stock to do that. But be careful, because they can come out and the next report, this is what I expect. I expect them to give a special dividend and maybe do some buyback. And when they come to the market and hit buy, they have $3 billion surplus over the next 12 months of debt. Be careful. If I was contacting Zim, if I was talking to the CFO, I can tell him what to do and the stock would fly. But they didn't contact me. I have 1,500 shares, average like $47 on Zim. For $10,000, I would consult them for a week and tell them what to do, and the stock would fly. Might not fly to 80, but instead of $24, $25, we can see $35, $40. And then from there, maybe retail will pick it up. If retail picked up Zim, this thing can go to 100. I hope to try to push Zim, Wall Street Bets, and other places. But enough talking about that. The whole point of that is I don't want to short Levi's. I don't want to short CarMax. I don't want to short Nike. I'm not saying they can't go down. But if I can short companies like CYBR, IRTC, I traded that a few times. Wing, WING, Buffalo Wild Wings. I could short Chipotle. These are restaurants with a 60, 70 times P ratio. I'm up on the Firm. I'm up on Snap. Snap dipped to like 980. Peloton was almost 7. Carnival Cruise Line, CCL, hit a 30-year low. I was buying puts at 11, 12. They're not going to make money for a long time. Insane debt. They just raised $1 billion printing new shares like a month ago. If I can short stuff like that doesn't make money and won't make money, why do I want to short Nike? So my plans going into this week, pretty similar to last week. I'm hoping to do at least one put a day cover, hold up to 15 puts. Maybe I'll carry 1 or 2 more puts. Things are going according to plan right now. The Nasdaq is in my range that I'm looking for. So when things are in my range, I feel more comfortable to trade. And as I have a more higher turnover rate on my puts, I will add to my puts. I might hang on to 20 puts. I might hang on to 25 puts, but only if everything is hitting. So if on one of the days next week I cover on 5 puts, I'm going to feel a lot more better about carrying more puts. But don't worry. Just because I covered a put, because people are asking me what happens when you cover the put and you can no longer mess with that stock. Place has over 100 way well overvalued stocks that could buy puts on. All right. I was upset yesterday. I didn't get MNDY Monday. So there's so many things that I could buy puts on. I just don't want to carry a lot of puts. Good luck, but put city still.